gold prices declined on Tuesday, settling near $4,540 per ounce after a 0.6% drop. The move followed a modest recovery on Monday, where traders had briefly returned to the yellow metal after it reached a 2.5-month low. The decline came amid a backdrop of rising Treasury yields and a stronger U.S. dollar, both of which are known to suppress demand for non-yielding assets like gold. Investors are now recalibrating their positions as conflicting signals from the U.S. Iran standoff continue to influence market sentiment. The U.S. Treasury yield climbed to its highest levels in years, which puts pressure on gold as an asset that does not generate income. This is a key factor in the current weakness, as higher yields typically draw capital away from gold and into interest-bearing securities. At the same time, the dollar gained 0.2% against a basket of currencies, increasing the cost of gold for international buyers and adding to the downward pressure on bullion prices. The geopolitical situation remains a wildcard. President Trump announced that he had authorized additional military operations against Iran but chose to delay them. Gulf state leaders, including Qatar, Saudi Arabia, and the United Arab Emirates, are reportedly seeking more time to pursue diplomatic solutions. While Trump's statements initially caused oil prices to fall, most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Uncertainty surrounding a potential escalation has kept investor nerves on edge. Gold, traditionally seen as a safe haven asset, has not been able to capitalize on this tension, suggesting that other factors are currently dominating market sentiment. Gold has lost nearly 14% in value since the U.S. Iran conflict escalated. Despite this, Goldman Sachs still forecasts a year-end price of $5,400 per ounce, based on long-term inflation expectations and ongoing global uncertainty. However, the recent pullback indicates that market participants are not yet convinced that gold can maintain a strong upward trajectory in the near term. The technical picture is mixed. On Monday, the market saw a small rebound, as value-seeking traders entered the market after the metal hit a multi-month low. But on Tuesday, the momentum reversed as investors processed the latest developments in the Iran situation and the broader economic environment. Futures contracts for June 2026 also declined, settling at $4,543.62 per ounce, reinforcing the bearish tone. The combination of rising yields and dollar strength has created a challenging environment for gold. As yields climb, gold becomes less attractive compared to income-generating assets like bonds and stocks. The U.S. dollar's strength further compounds this issue by making gold more expensive for buyers using other currencies. These factors are likely to remain in focus for the near term, especially if central banks continue to signal tighter monetary policy. Investors are also watching closely for any new developments in the U.S. Iran standoff. While Trump's decision to delay military action has temporarily eased some tensions, the underlying risks remain. If diplomatic efforts fail and hostilities resume, gold could see a short-term bounce as investors seek protection from geopolitical risk. However, if a lasting resolution is reached, the demand for gold could weaken further as the market shifts focus to other economic indicators. The next key signal for gold traders will be the outcome of the ongoing diplomatic discussions in the Gulf region. A breakthrough. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Could lead to a reduction in volatility and a shift in investor sentiment. Alternatively, renewed tensions could trigger a short-term rally in gold. Market participants will also be watching closely for any changes in Treasury yields and dollar strength, as these factors will continue to influence the broader precious metals market. For now, gold remains in a consolidation phase, with traders closely monitoring both geopolitical and economic developments. The market is not yet showing a clear direction, and the next move will likely depend on whether the U.S. Iran situation stabilizes or escalates. Until then, gold is likely to remain range-bound, with occasional volatility driven by new information.